Hi, thank you, Keely. Everybody can hear me, I think. I'm not having anybody tell me no, so I will assume you can. Okay, moving on to the next slide. I have a bit of a cold, so I hope I'm not talking too quietly. There's a screenshot of the FarmLINK website. We'll be visiting. There's some feedback. Keely, if I mute my speakers, that's okay, right? Everybody can still hear me now. Is that better? Yes. Okay. All right. There's the FarmLINK web page. Good. We will be visiting there today just to familiarize everybody with the site. And just a little recap so far for those of you who have attended all of the webinars and received sort of the self-assessment tool at the very beginning. You would have taken some time to think about the foundations of your farm vision and set some goals and thought about what products would be in line with, you know, what's important to you, what your strengths are, that kind of thing. I can't emphasize enough how important that initial kind of self-evaluation is to building a strong foundation for your farm vision. And then in our first webinar, we discussed your operations strategy, mainly, you know, what will you produce and how, with whom, how will you record the results, that kind of thing. Talked a bit about your labor strategy and how the feedback from your first years will influence your cost of production. And then your marketing strategy. So last week we talked, or 2 weeks ago, we spoke a lot about marketing, how to, you know, a little bit about setting price, how to get those initial customers, options you have with respect to wholesale versus direct marketing, etc. And all of that was feeding into what we are going to be discussing today, which is how to build a sustainable financial plan. It doesn't matter how many customers you have or how good you are at producing your food. If you can't do it sustainably from a financial perspective, then you're you know, if you aim to do this to make a living, then you won't be doing it for very long. And of course, as you probably know, most small businesses fail in the first 5 years, farm or not. Most small businesses do not succeed, and it's usually because of a lack of good planning from the outset. And of course, farms tend to be even more at risk just because you know, there's so many extenuating circumstances and factors outside of our control as farmers. Keely, I'm being told there's a flutter in the sound. Everything I've got on my end is exactly the same as it always has been, but if you have any suggestions for me, please let me know. A buzzing. There's a buzzing. There's no buzzing over here. Yeah, my laptop fan is going. I don't know if I can do anything about that. So maybe it will stop going in a bit. But I hope it's acceptable. All right. No problem. That's good. Okay. All right. Let me see. Good. Okay. So we are going to talk a bit about some of the tools that you will use to build a financial plan. The initial kind of budgeting tools, a lot of planning type tools to begin with, and then some financial documents that you will use later on once you actually have some data. So in the beginning stages, for those of you who are planning your farm, your future farm, how do you know if the ideas you've come up with thus far about what you want to produce and how you want to sell it, if those are financially feasible? So it starts with the question of, well, what is financially feasible? It all depends on what your financial thank you. In fact, Sean, I've started doing that. So let's hope Let's hope that if I keep it lifted off, it will stop. It's not hot in this room, that's for sure. So what are your financial goals? And everybody's going to have different financial goals. It might be that you want to support your family entirely with farm labor or farm work, farm income. Or maybe it's a job for you and your other partner will be working off farm. In which case, I don't think there's any difference in terms of, I'm in a situation where my husband works off farm, but that doesn't mean that my farm business can be any less successful because I have to bring in 50% of the income to support our family. The farm has to do that. We make we draw a strong line between his income and my income so that, I don't want to run a business that's propped up by somebody else's off-farm income. If I'm doing that, I am basically supporting an unsustainable farm vision, and I would rather leave that market to somebody who can do it sustainably. Now, it might just be supplementary income. If you've already decided this is a hobby, what have you, whatever it is, it's fine. But you have to know what your goals are so that you can decide, if your ideas are feasible as you begin to analyze them. So how do you do that? Number one, you're going to do some projections. We're going to talk about how to project your income and your expenses, otherwise known as a budget, enterprise budget, and how to prepare a cash flow statement. So if you are at the planning stages, this is stuff that you should be thinking about and doing. These are things you do before you start farming. And before I started my own business, in the year before, in order to get a mortgage and to have a farm business plan, I did a lot of number crunching. And I'll probably say it a couple of times, it's not that hard to draw up a rather accurate budget before you even start farming. There's a lot of information out there that you can access to input into budgets or cash flow statements, which you will refine over time. But your initial budgets can be done even though you might not be farming yet. So these are things that you should be doing if you're really serious about farming for a living. So I'm going to just start with a tool that I've started to use. It's a personal tool. I developed it for myself because it works for my brain. It is a budget, but I've kind of reorganized the information so that it's more of a pricing tool, and you'll see what I mean when you see it. But to assess your ideas, there are some questions you have to ask yourself. First of all, based on your financial goals, what do I need to earn on an hourly basis? And that's actually very simple math. If you've decided that every year you need to earn $50,000, a more useful number to work with may be divide that by the number of hours you plan on being available to work on your farm, and what does that translate into as far as an hourly wage for yourself is concerned. And then a few more questions. How many hours will I work? What will my capital costs be, and what will my annual costs be? All right. So I'm going to share my screen with you in a moment so that you can see my pricing tool or my budget, and then we'll get back to this slide here, which is kind of a synthesis of the information I'm about to share with you. So I haven't done this in a while. Let me see. Share my screen. Okay. Cool. Now I think that you can all see an Excel spreadsheet. I can still see my chat box, so if you cannot see my spreadsheet, yes! Okay, so great. Okay, good. So this is my little pricing tool, and you can see the questions that have been asked of you thus far. So there's my question in blue in the top left corner. What do I need to earn on an hourly basis, which is based on a larger financial goal? And in this instance, let's say it's $20 an hour. The other question for this, and this, by the way, sorry, is a budget or a pricing tool for pastured pigs. But I have one of these for every one of my enterprises on the farm, and they're all linked. So in this case, it's pigs. So the next question is, how many pigs will I raise? And this is an individual question. It could be based on how much land you have. It could be based on whether or not there are marketing regulations as to how many you can raise. And it may be based on how many you think you can sell. So I could raise a whole lot more than 20 pigs on my farm, but I can comfortably market a little over 20. So I put 20 in for this example. Then there are the three questions that I showed you just a second ago, and those are written in blue. How many hours will I work? What are my capital costs? And what are my annual costs? So in how many hours will I work? This is where I sort of do a daily, some accounting on how many hours does it take to do every part of raising pigs. And pigs is a very simple one. If this were market gardening, this would be a lot more elaborate. But go through the whole year, and I think of all the things I need to do and how many hours it will take me. It works out to about 112 hours, and if I multiply that by my hourly hourly rate of $20 an hour, there in blue you can see 2,240. So that's how much money I need to make just to pay myself. It's a really common mistake that new business owners make, which is they pay themselves last. Whatever's left over at the end of the day is what goes into their pockets. Well, you won't make anything if you do that. Put it right into your budget so that you know that money is there for you. Next, what are my capital costs? So capital costs, those are the items that you need to buy to start, in this example, raising pigs. However, you only buy them once, or once every, very rarely do you need to buy them again. So it's your infrastructure, so fencing, my drinker, water pipes, the fencer, the trough, the feeder, etc. And this all totals up to $3,530, but you don't have to buy these things every year. So I divided them each by 8, assuming that on average, again, you could be far more accurate about this, but on average, each of these items will last me 8 years. Therefore, the number in blue that you can see there is my amortized cost. So every year, I need to make $441 to continue to cover my capital costs. And that way I have some money in the bank to replace these things when they expire. And then what are my annual costs? So the things I do need to buy in every year, weaners are baby piglets. They're not born on our farm in the case of this example. We buy in feed, total processing costs, so going to the butcher. Now these are all things that you can figure out by doing your research, right? Call a butcher. How much does it cost to kill a pig? Okay, that kind of thing. Mileage and overhead. So again, this is a little bit simplified, but overhead, as you can see there, $1,000 I have budgeted, and this is a little oversimplified again for your sake, but I can't overemphasize how important it is to account for all your overhead costs, and I'll touch on that again later on. So if I add up those three numbers in blue, I need to make just over $18,000 to cover all of my costs, which includes the cost of paying myself a wage that is sustainable. Not done there, I add another 20%. Now this kind of starts out as a contingency, so if you mess up or things go horribly wrong, you're still okay. And 20% may sound like overkill, but trust me, it's not, especially when you're getting into farming, especially when you're dealing with things that are alive and can die, which is all things. And if things go well, then there's your margin, because on top of earning a salary, you want to be putting some money away. So I think that's a fair margin as well. Now I want to know that I can earn just shy of $22,000. I do some quick math. if I can assume I have 140 pounds of actual packaged meat coming from each pig, and I'm raising 20 of them, that's 2,800 pounds of meat. So now all I do is I divide my desired, the money I need to make, the $21,817. I divide that by the total pounds of meat I have, and I end up with the price per pound I need to sell to make my goal. So last time we chatted about marketing, and I told you, do some research, look around, see what other farmers are selling their pastured pork for, but don't ever copy them, because you don't know what their expenses are actually like, and you'll lose money or be maybe making way more. I don't know, but it won't be accurate. You really have to figure out your own costs. And when you get started, thank goodness you have that fudge factor, that 20% contingency in there, because you'll realize, oh, this cost me a bit more. Oh, it took me more time to do the marketing than I realized, etc., etc. Anyways, you get the idea, and as you start actually producing, you can review these numbers, and I review them every year because prices go up all across the board, and I need to make sure that, as my processing costs go up, my costs go up, that I am still making money. Okay. How do I stop sharing? Stop sharing. Okay, I think we're back. So this is just a synthesis of that spreadsheet that I showed you, just to kind of give you a picture in one. The Excel template is not really available. I don't mind sharing it. I could have Keely send it out to everybody, but the thing that I want to make really sure that you all do, put your own numbers in, because I might have, exactly. You would be ripping yourself off to use my numbers, but I'm very happy for you to use the template. Knowing, or what you have to know is that it's a work in progress. It's my own. I change it all the time, but it's basically just a budget reorganized to serve more as a pricing tool. Okay, so let's talk a bit more about budgeting. So if you are just projecting into the future, we call that an enterprise budget. But as time goes by and you actually do the production, now it's a historical record. And if you've heard the terms income statement, statement of profit and loss, statement of operations, those things are basically the same thing as a budget, but accurately reflecting what happened that year. Now, a balance sheet, we'll get to that, or a net worth statement, though that's slightly different, but those are also historical records. You can't produce that before you've actually started farming. So again, you're going to be taking the data from your marketing plan, your production records, your labor plan, and all of that is going to be feeding into your budget. So again, a budget helps you make an estimate of the costs and the profit of a particular crop or enterprise, and it forces you to look at each part of your business. So the inputs, your labor, the equipment required, marketing requirements, and so on. So a little something else just to be aware of when you are doing your budgeting. One moment. Okay. Are the difference between fixed costs and variable costs. So fixed costs stay the same no matter how much or little you produce of something. So no matter how much you grow, your mortgage or your land rent will be the same. Will be what you pay your staff on an hourly basis. So those kinds of things stay the same. Variable costs will change based on how much you produce. So if you double your production, your seed, you will need to double your seed as well. Okay, so just a simple, you'll hear about fixed and variable costs, so just so you know what they are. Now I mentioned we'd be talking a little bit about Richard Wiswall. These are, don't worry, you're not expected to really be able to see these, but these are pages out of the Organic Farmer's Business Handbook, which is a great book. And this is a much more fleshed out enterprise budget. And as a market gardener, he has to do a budget for every single crop he produces. And so I find that market gardeners don't always produce really good budgets because it's really hard to do it. But you still have to do it, and don't be deterred. A lot of market gardeners do price their products just from comparing with other farmers because it's just seen as being way too difficult to figure it out. But as you can see, Richard Wiswall has figured it out, as have others who've written books. And so, you owe it to yourself to do the same. So for each crop that Wiswall produced, he was tracking his pre-harvest costs, costs such as the labor cost, not only for himself, but for his staff. And this is a really, you'll really start to notice if you need to make $30 an hour on your farm, that's fine for certain jobs. But if you're hoeing or hand weeding, those are jobs that they're not really $30 an hour jobs, let's put it that way. And you probably owe it to yourself to look at a different labor strategy where somebody who is making a lower wage is doing the less skilled jobs, freeing you up to focus on doing the more skilled jobs. Your machinery costs for each thing that you're doing. There's going to be wear and tear on your machinery, and the product or the input costs, so seeds, compost, that kind of thing. So pre-harvest, harvest, and post-harvest. So making sure you get every job that is related to the production of each crop. So he tracked all those numbers. And here's a very, very simplified version of what he figured out for kale. And what he does is for each crop, he uses the same unit. And it's not per pound or per bunch or whatever. It's a unit of land. So he can compare all of his crops on a per unit basis, which is 2 350-foot beds. All of his beds are the same length, which I think is very helpful. And so what he has figured out, when he adds in all of his crop costs, including overhead, and his sales, when he's figured that out, he's figured out his net profit. And then he can expand that out on a per acre basis, or he can come down to a per unit basis. So what he's figured out is per unit he makes 88 cents per unit for growing kale. I hope that made sense. But the big point is he can compare crops now. So on a per unit basis, as you can see, the difference between what he's making on kale versus broccoli versus tomatoes is huge. 89 cents per unit profit on kale versus almost $20 per unit on tomatoes. So the question is, why the heck are you growing kale? And he also did one for peas in the book. I think he loses 68 cents per unit on peas. So I think a lot of people who are market gardeners feel like they have to grow everything to have that diversity, and really you don't. You'll still be growing lots of crops. Might as well grow the ones that you're going to make money at. And again, overhead, if you forget to completely account for your overhead costs, it's one of the biggest mistakes you can make with your budgets. And it took us a few years to really nail down what our overhead costs were. Because, when you think of raising pigs, you think of, the cost of feed, the cost of the piglets, the cost of slaughter. You don't think of the cost of plowing your laneway out in the winter, or the cost of buying envelopes to mail your bills in, or, every little thing, your internet cost, everything. And so really make sure you keep all of your business-related receipts, so that when you do your books at the end of every year, you get a very accurate sense of what your overhead is. And this is just, again, I guess, emphasizes that track all your expenses. Your hourly labor rate, again, your overhead, cost per hour of running the tractor, cost of setting up irrigation, delivery, market costs. These are all ones that people tend to forget about. So yeah, it's a lot of work, but it's really, really fundamental work. A distinction to be aware of, the concept of the size neutral profit potential. So some enterprises will be more profitable the larger you get, and others will not. Those ones are called size neutral. So with the meat chickens there on the left, I net about $10 a chicken. No matter whether I do 100 or 300, the profit per bird is about the same. Because most of the expenses related to those chickens are variable. There's not a lot of big expenses, big infrastructure expenses. But with my ruminants, like my grass-fed beef and lamb, I actually net more money the more animals I have because there's more infrastructure costs, and I can spread those out over all of the animals that I raise. And if I just cannot raise any more beef animals because the market's not there, that's, where being able to stack enterprises, so I also have grass-fed lamb, becomes helpful because they still can share the infrastructure costs. Okay, so cash flow. It's a little bit on budgeting, and this is talking about cash flow, money that you have, and the reason why cash flow is just as important as a budget is because you may draw up a great budget and be able to assure yourself that you will be making money, but that doesn't mean that on a month-by-month basis you have the money that you'll need. So, the second bullet there, farmers traditionally have a lumpy cash flow, meaning that not every month are you making about the same and spending about the same. There are certain months where you'll be spending far more than you're going to make, and certain months where you'll be making more than you spend. But regardless, you have to pay your bills. And so payroll, every month our hydro bill comes in and the internet bill comes in. You have to pay those bills. So you can be successful at the end of the year, but not successful on a monthly basis. So this is a very simple cash flow statement. And if, it's technically still winter out there, if you don't know how to do a cash flow, that would be a great project for yourself. I'm just going to walk you through it as simply as I can. And it's quite small on my screen, but okay. Top. Okay, I'm going to try something crazy here. No, I'm not. Never mind. I was going to get out the highlighter, but forget it. Okay, if you look in the top left-hand corner under January, you can see the bank balance of $5,000. So let's just say in this example of a cash flow, you start your business, you got $5,000 in the bank, and all right, the next few rows relate to your income. So you've got vegetable income of $9,000 that month. You got some meat income of $5,000 that month. That's a pretty good January. Total sales of $14,000. And then you've spent some money, and it looks like it's hard for me to see the number, $9,500, I think. So that's your cash outflow, your expenses. So if you subtract those expenses from your income, you made $4,400 in January. So great. That goes up to the number right under February of $9,400. So your bank balance has gone up. That's great. So now you have $9,400 in the bank. If you look at your total sales that month, you made $13,000 in vegetables and meat sales. You spent $11,000, so you made about $1,900 that month. Okay, no problem. That feeds into your bank balance for March. So now you have $11,300. Great. Total sales that month were $21,800. But you spent $16,000. Okay, you made $3,800. That you add on to your $11,000 from March. Now you got $15,000. So life goes on. But as you can see in April, you only made $12,000, but you spent $23,100. So you lost money. You lost $11,100 that month. no problem. You had more money in the bank. So in May, you've got a balance of 4,000. But the same thing happened, and if you see at the bottom of May, you lost some more money that month. $5,650 was how much you lost. So now your bank balance at the beginning of June is looking a little tight. And as you can see, you lose money again that month. Come July, you don't have any money in the bank. You are actually at a deficit of $800, and it gets worse in August. So how do you pay your bills when you are spending more money than you're making? Well, the good news is that this is a cash flow statement and not, this is a projection. So this is a tool to help you see when these things are going to happen, because they often do happen. So what can you do when you know that in June you're going to have a deficit in your bank account? You may decide to borrow money. You might get a line of credit, and lines of credit are excellent for farmers because it's way better than a credit card, and it's way easier than a loan. You can just take it, pay it back, take it, pay it back, that kind of thing. So that's what we use. So I don't think credit cards are the best use for that, though. It's an option, or a self-funded loan. So if you have your own savings outside of your farm income, you may decide to loan some money to the bank or to the farm. What we do is we use our cash flow data to inform our marketing strategy. And so knowing that we would not have enough money to, say, buy pig feed midsummer, we made a target of getting a certain percentage of our meat sold by that time of year. And when we sell meat, we take a deposit. So when you place an order on our website for a bundle of pork, there's a $75 deposit. You pay that, and that overcomes our cash flow shortage, and it in essence pays for the feed for the pigs to produce the pork that our customers will someday eat. So it works really well, and there's some other benefits to having those deposits, because it really ensures nobody's going to change their mind on us and not show up on the day that they come to get their meat, for example. It also has helped us set some other marketing targets. So for our vegetable CSA, even though it starts in November, by the end of March, I aim to have 50% of my members already signed up and paid. So I only really did that because I knew I was going to have a cash flow shortage. And certain enterprises have better cash flow than others. So if you're going to a weekly farmer's market, you're getting cash every week. I do pastured meats that only are slaughtered once a year. And so I have a real, I'm not making any money in the summer, but then I make a whole bunch in November, December. So I really have to plan for those dry months. So cash flows are like a business dashboard. It's a proactive planning tool. It's a way to monitor what's going on. And as real data comes in, as you actually start farming, you want to update these numbers, and it can provide early warning signs. So that red flags will come up in advance of when you actually have trouble. Now, that's all I was going to say about that. Somehow one of my cats infiltrated my room and distracted me. Okay. Oh, I remember what I was going to say. Just quickly, I work a lot in Excel for all of my budgeting work. And so I have that planning tool, that pricing tool, or an enterprise budget for every enterprise I have. All those numbers feed into my cash flow automatically. So, because I know a thing or two about Excel, I can say, okay, well, every month this is going to be my feed costs for my pigs, and it's going to go up every month as they grow and eat more. Those numbers feed right into my cash flow. So if things change, if I then say, instead of 20 pigs, I'm going to raise 15 pigs, my feed costs, automatically, my budget for my feed costs are updated and my cash flow is updated. So it's really powerful and simple tool, Excel. I also use QuickBooks more for my tax work. So inputting all of my expenses and income for my accountant, I like QuickBooks because she also uses QuickBooks, and it's really simple in terms of doing my taxes. So just FYI, an equity statement, balance sheet. This is where you take everything. Oh yeah, thank you, Jeff. Google Sheets is almost identical in a lot of ways to Excel, and it's awesome because you don't need your computer. Wherever you go, you can work on your file. You can't lose it. It saves automatically, kind of thing. Balance sheet will take everything you own, which are your assets, everything you owe, which are your liabilities, and subtract those, and what you basically have left over is your equity. And that's an interesting number that usually goes up over time as you pay down your mortgage and accrue assets. If you hear the word net worth statement, it's basically the same as a balance sheet, but it pertains to you personally and not your business. Just an FYI. So why do you do all of this? Why do you collect all of this financial information? Obviously for you, but also for any lenders you may have, and the government as well. So we'll just touch on those. Clearly you need this financial information to make management decisions about your farm. Assess how the farm is doing, help you calculate your cost of production and set your prices, prepare all these budgets. When you add all of this together with your marketing and your production plan and your HR plan, this is your business plan. The next part is for lenders. And you may be thinking, okay, but I don't need to borrow any money. What I really encourage people to do is, even if you don't need to borrow money when you get started, keep your books as though you plan to. That way you'll have everything you need if that time comes. Even if you see a grant that you're interested in, a lot of grant applications will ask to see the same things that lenders will want to see. So a net worth statement, income tax returns, pay stubs, business plan, credit rating, all of those kinds of things are things that lenders are interested in, as well as, if you've already started your farm, financial statements for the last 3 years. And so very, very, very important, keep all of your receipts for all of your business expenses. Even things that are only loosely business expenses, your accountant can usually, let's say we painted our house. Well, a certain part of our house is my farm office, so I can actually claim a certain amount of the paint for my office. Everything can be qualified as an expense. And then finally, the government. You need to keep all these numbers for the government. They will want every year a completed statement of farming activities. This is when you do your taxes. And once you start grossing over $7,000, this is the Ontario number, and I think for the most part this holds true throughout the country, but the specific numbers are different. Once you earn over $7,000 in Ontario, you will need a farm business registration number, and you get that from AgriCorp, which is AgriCorp, C-O-R-P, and they will issue you a farm business registration number. This is a really, really handy number to have, because any farmer with one can claim all of their, all the HST in Ontario, that is, that they spent on their business expenses. They can get it all back. So you want to get to that $7,000 really fast so that you can start, if you're going to buy something really expensive, you want all that HST back. So when we get our income tax return in the summer, it's literally Christmas in July when that check comes in. So track all of your expenses for sure. And also make sure you log every single sale you make as well. So people think that they want to downplay how much they earn so that they don't have to pay so many taxes, but you've got to get to that $7,000 threshold. There is there is a way that you can get an exemption if you haven't gotten there yet, but you can show with your, your excellent budgets that you intend to get there in 3 years. You may be granted an exemption as well. So look into Farm Business Registration Number to learn more about that. All right, so again, start with setting financial goals that are true to your own personal needs. Set yourself up with good enterprise budgets, and as you start farming, replace your estimates with actual costs. Learn how to make and use a cash flow budget to plan accordingly for those cash shortages, and hire an accountant, especially one with agricultural experience. There's all kinds of things that accountants know about how to, make your numbers work for you, and it's definitely worth the money. Okay, before we get into questions, I'll just say your next webinar and the last webinar is on financing and loans. Again, when I started farming, I did not think we would need to borrow money for anything, and that was a really short-sighted view of things. You may be able to get your farm off the ground with your own savings, but then there's maintaining your farm and growing your farm to the next step. And we can only see so far into the future with the plans that we have. Things change, and even though you may not plan on borrowing money right away, the day may come, and you need to really start preparing right from the get-go so that you would be would qualify. And not all loans and financing are banks, come from banks. I'm going to talk a bit about slow money and personal loans as well. Talk about accessing land, and that's, I think, all I will tell you about next webinar right now. So if you have any questions, please, it's 12:44, so that's great. We have time to take some questions. I'll stop talking now and see if anyone has any. Pam, I hope that's the slide. Tell me if you want me to go back another slide. If anybody out there has suggestions for people for resources, for templates, that kind of thing, there are a lot of cash flow. Like, building a cash flow requires that every cell kind of has a formula in it so that it informs the next cell. So you can't build one, well, you can, but you don't need to build one on your own. There are a million templates out there that are free online for cash flows. So yeah, I would look around and see what you can find, and then just start tweaking it from there. Can I speak more to my strategies on stacking enterprises? Yeah, so I don't have, okay, basically one of my bases for stacking enterprises is I have sheep, grass-fed lamb, and I don't deworm them. And part of the strategy for doing that is that I don't want my sheep to go back to the same piece of land too soon. So the grass will regrow in about 30 days and be ready to be regrazed, but I know that it will carry parasites that will affect the sheep. And so I have to do something with that grass. In the meantime, I might want to hay it. I might want to just mow it. But wouldn't it be better if I could make some money off of it? So I actually graze some cows behind my sheep. And so they graze on the regrowth, on the grass regrowth. And that's called multi-species grazing. And in essence, I'm doing it to control parasite growth. because cattle are not, they're dead-end hosts for sheep parasites, so they're not going to be affected by those worms. So they come along cleaning up my parasite load so that when the sheep do get around to grazing there again, the grass is clean. So the only other way, people would see it as a waste of space if I only brought my sheep around my farm and only grazed them there, once or maybe twice a year. But by stacking enterprises, I can make more money on that on the same amount of land. And then after the cattle have gone through, the grass is nice and short. It's a great time to bring my pastured poultry through and fertilize that grass behind them. So that's sort of my animals do a bit of a dance around the farm in a way that is really synergistic ecologically speaking, but it's also a very smart way of using my land and making money in different ways from the same bit of infrastructure. We're kind of doing the same thing. We're starting a spring green CSA because I have all this infrastructure for my winter CSA that doesn't do anything for me in March, April, May. So why not grow greens in my greenhouses and essentially no upfront costs because I have all of the infrastructure already. So I hope that's just a way to get your minds thinking about, okay, well, how can I really make the best use possible of this infrastructure that I have. Okay, I'm not seeing any more questions. Some good discussion going on about Richard Wiswall's book.
Thanks, Tara. Thanks so much. We do have, if anyone has questions, we could spend a couple more minutes, or I encourage folks to use the chat box too. As Tara mentioned, for FarmLink, the website, we have the resource database that I'm currently building up with more resources. So feel free to email me at the info@farmlink.net anytime. Okay, we got one more question coming in. Yeah.
Yes,
and just
go ahead and ask it.
Yeah, we have everyone's mics blocked, so if you can just type your question, Tara can get it. And then maybe have one more question.
Just type your question into the chat box and I can answer it for you. Maybe. Oh my goodness. I'm waiting for some people to finish typing, but I meant to show you something. You want to know a bit more about how to estimate costs. Okay. Let me take everybody in the time that we have to the to the FarmLink website. So come with me, and that's okay. Share my screen. Goodness. Okay, so I believe you are all with me now on the FarmLink website. So again, there's some really great resources here, and one of them that I'll share with you is kind of like what we talked about today, but in a lot more detail. If you go to the business section, let's click on Financial Management Tools and apply filter. Important farm financials, how to get started. So I just clicked on that, and this webinar covers an introduction to farm financials presented by Paul Kwam with 40 years of experience with agricultural finance. In it, he discusses what numbers need to be collected, how to use them to formulate a cash flow enterprise, as well as projected income. So a really, really meaty webinar for you to have a look at. I can only do so much in an hour, so this would be definitely next level there for you. And as well, go along and have a look at what else you can find there on the FarmLink website. There's all kinds of great resources. I'll turn it back over to you, Keely. And
Great,
yeah,
thanks, Tara.
I'll
Tara,
still
we
be
can
here
all
until the
maybe
end.
just
So if your questions come
clapping
in,
via the
good, good.
interweb to each other with some thumbs up and thanks. Thanks again so much for your time and expertise, Tara. I think it's a real asset for all of us in the
Okay,
room to
Keely,
hear
back to you.
hear what your experience and then how we can all formulate our best plans to move forward in a financial, sustainable way. So the next webinar is March 13th. If folks haven't registered, I'd encourage you to grab us for the last one. And if you've missed the ones again, to find the links, and I'd be happy to send out some of the resources that we've seen today, or again to email me and what you want to see or what you can't find, and I will Nancy Drew it. I will find it and I will get it out there so that we can all be building
Well, it
a
sounds like
level of
Keely has no
education
closing
together.
remarks,
Thanks so
so
much,
I
everyone.
will just, I'm just going to thank everybody so much, and thank you for the thank yous, and hopefully we shall see you in 2 weeks' time. Bye.
Thanks, everyone. We'll see you March 13th if you want to join the last one, and we'll try and get those I can get those resources out to you, or let me know what resources else you're looking for. Thank you.